Money from venture capital firms appears to be drying up for startups. According to Crunchbase data, global venture funding slumped to $47 billion last month for private companies. That's the lowest level in the past 12 months. And this picture not only matters to the C-suite executives at early stage companies, but to employees as well if they get some of their pay in company stock or have options to buy company stock. Joining us to discuss more is Vested co-founder and CEO Michael Delgado. Michael, you run a firm that kind of seeks to help employees get a little bit more educated on these types of issues. You say there are employees that are leaving a lot of money on the table by not properly understanding their options. Tell us a little bit more about kind of how this also fits into the macro, because look, with a lot of companies going public, a lot of people are saying, should I be exercising these types of things? Should I be taking advantage of these parts of my comp?
Yeah, hey, great to be with you. Thanks for having me. So what we're seeing happening is, markets are cyclical, and we're now at a part where the markets are going down. As in the past few months, some companies have gone public. The public markets didn't take too kindly to their valuations, and so that valuation pressure is starting to move down into private companies, starting with late stage companies and potentially moving to earlier stage companies. What this all means for employees is employees basically need to be aware of what is going on. So Vested helps employees. We're the only company really in the tech ecosystem that is employee first. And we help employees understand their equity in the first place, which is a huge part of making sure that an employee can capture the value of their equity. And then when the time comes for an employee to exercise stock options, we help them get the funding they need to do that if they can't find it themselves. So what does this all mean, the current environment for employees? It means more than ever, it's important to understand your options in the first place, the nature of your equity, and Vested has tools that can help employees do that.
Michael, what are you hearing from employees in some of these companies? I mean, we've heard just anecdotally of employees who are saying, look, when they're talking about their salary, it used to be that so much of that was in stock options for the company. Now they're saying that's not going to be worth as much, especially as we've seen valuations for tech companies pull back significantly.
Yeah, that's a great question. What we're hearing is definitely some employees are nervous, but the important thing for employees to keep in mind at this time is equity is a long game. And in fact, given that equity in a private company being generally illiquid, it can be a feature rather than a bug. And so it's important for employees to play the long game. If you're at an earlier stage company, maybe it's a Series A, Series B, Series C company, you're going to be there for some years. You're not necessarily intending to, you may not even be able to cash out within the next 1 or 2 years. And so it is okay for you maybe that the markets are not in their best spot right now because they may turn over the coming years. And if you're there at an earlier stage and the company goes on to create value, the markets will reward that. The company will be worth more and your equity will be worth more. And so that's really the important thing, is to keep your eyes on the prize, play the long game when it comes to your equity. And if you're at a good company, the equity is going to be worth more.
Michael, what's interesting is that, even today we saw news that SpaceX employees planning to offer to sell their shares in a private placement. It'd be about $125 billion. This is obviously a pretty mature company, but still private placement. What do people who maybe not at SpaceX, but at any other startup company need to know about the liquidity of these types of shares? Because it's not necessarily the easiest thing to flip and to liquidate if, for example, you did want to exercise your company options, but didn't know what to do quite after the fact.
Yeah, that's exactly right. And you're right that the SpaceX is an interesting case. It's the employees coming together and doing a tender, and it is employee driven. And you're also right that SpaceX is a later stage company, and so maybe not representative of what goes on with earlier stage companies. However, what employees need to understand is there are options. Just because a company is not private, that doesn't mean that the equity value that you may have is completely locked up. Vested is in fact one of the options for employees to get some liquidity, whether it's to exercise options or to sell shares. And there are others out there. The important thing, again, really goes back to, in the first place, for employees, understand what you have. Take the time to really dig into your equity documents and understand, what's my strike price? What's the company worth today? The difference between those two numbers can be material for you. And then what's going on in the larger market? Is there interest in my company shares, even though I'm only at a Series B, Series C company? Employees may be surprised to learn there often is interest in those earlier stage companies. And again, Vested is a place that can find that.
And finally, Michael, I know you don't just work with employees, you work with investors as well who are looking to get some exposure to these startups. What's that interest looking like these days?
Yeah, so the interest is strong. We're different from other secondary markets in the private space in that we are not facilitating one-to-one deals between investors and employees. And in those cases, I think that the interest has maybe dampened a bit because people are well aware of maybe what's going on with some of those later stage companies like a SpaceX, where they're well studied and they may be feeling some valuation pressure. Vested is different in that what we offer to investors is diversified access to venture. So we're not saying investors come on down and get exposure to an individual company. We create a product that is sort of like a venture index, and we provide that to investors. And demand for that has remained strong. And what that means is back on the employee-facing side, we're able to do deals that no other secondary market can do because investors don't need to underwrite your specific company in order for Vested to be able to help you with some liquidity in that company because we have that diversified venture basket product.
Michael Delgado, Vested co-founder and CEO. It's great to have you on today. Appreciate the time.